The Trump rally, how long can this wonderful thing last? The economic growth number and what the media did with it. And finally, is the great rotation of stocks starting to rotate and rotate and rotate? I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. This is the last one before Christmas, Paul, so you can be really mad.
Really mad.
Let's save that up for number 2 item. Trump rally. This is the gift that keeps on giving.
Yeah, look, I mean, last night the market in the US close to 20,000. Looks like they want to have a go at 20,000.
Yeah.
Look, optimism reigns in the United States, and bring it on. So, look, don't stand in the way of the train, I think, is the best advice we can give people. If you've missed out on this, well, I think you've got to be a bit patient.
Yeah.
But, the US has got a head of steam up.
Yeah, and the oil man is now going to be Secretary of State. Like only Donald Trump would come up with that one.
Yeah, no, who knows? I don't think he should come out with a Treasury Secretary, but
good point.
He'll probably be wanting to print more bonds. I don't know, but Trump is seen as, they like him, at least the markets do.
And I was listening to a fund manager, a serious fund manager, who plays a pretty safe game, basically plays, like Vanguard type index funds, but he thinks Dow 21,000 is not too far away as well.
Well, that's
only in America.
That's optimism, Peter. We'll keep on getting these forecasts. Australia is just going to follow suit.
Yeah, and I love the sound of that. All right, economic growth. The number last week for September quarter was more negative than I thought. I thought a minus 2.2 was possible, minus 0.5. But what about some of the guys in the media pulling out the R word, Paul?
Look, the R word is just in fashion. I mean, the ABC and Fairfax lead the charts. The ABC, I mentioned this yesterday before, Peter, lead story yesterday was some crazy economist no one ever heard of talking about the chances we'll get a downgrade. I mean, look...
lose our debt rate.
Lose our AAA rating. It may happen, but let's wait till it happens rather than pick up some economist no one's heard of. Yeah. And then all the talk about recession. I mean, admittedly, we are in the east, you and I, Peter, and New South Wales and Victoria are doing a lot better than it's like in WA and parts of Queensland. But, the economy is not in recession. The data just doesn't make sense. The ABS, I think, has zero credibility. And don't get too worried about it. And the people pulling out the R word, look, this is nonsense.
Paul's a numbers man. That's why he's so hard on the ABS. The bottom line is, I think the December quarter will be pretty good compared to September. And we shouldn't be talking down the economy, especially people at Fairfax. They can lose their jobs. At the ABC, you can say what you like and live forever. But at Fairfax, they shouldn't be talking down the economy.
They should be talking it up. I mean, they rely on advertising. When they were classified through Domain, they want things to be robust. But all their coverage is about how bad it is. I mean, we saw it yesterday. NAB business conditions were down a little bit, but the lead is the worst in 18 months. Now, they're still positive. Confidence is still there.
And it's over the long-term average. It's still higher than the long-term average.
Yeah, I mean, look, unemployment is low. Retail sales are good. And, the farming, agriculture's doing all right, right? This economy is not
Go Australia.
Go Australia, we say.
Okay, this rotation. So the rotation was, Paul, we basically saw the big caps starting to do well, the top 20 stocks, when mid caps and small caps have done so well for a couple of years. And we saw telcos have suffered, the expensive defensive suffered. And this is all post-Donald Trump in particular. It's happened before, but Trump in particular. But now we're starting to see a bit of a rotation out of, well, not necessarily out of it, but into the other stocks that have been done.
I mean, I think we've seen that the velocity of rotation, if that's a good word, has picked up. And as you say, the last month and a half, it's all been about resources and financials. Yeah. No one wanted to touch healthcare. Some of the expensive defensive have been sold off. I think they've gone too far. Yeah. A bit like, why was CSL down $3 on Monday and back $2.50 yesterday? I can't work that out. But that's a good quality company. I think people are going to look at some of the stocks in healthcare, some of the so-called expensive defensive like Transurban, some of the industrials that have been growing okay, the Seeks and some of the other companies that haven't done anything wrong, yet have come off.
But also some of the REITs have really been smashed, but they're still bringing pretty good income
but they've come back. I mean, and some of the REITs are now back to almost where they were. So I mean,
are they viable then?
I don't think so. I think there's still one other major trend occurring. Bond rates in the US are still going higher. They had 10-year and 30-year auctions here the last two nights. We're almost 2.5% on the 10-year. We're up to almost 3.2% on the 30-year. It's the highest level in over 2 years.
Yeah.
That will impact some of these stocks.
But there will be a buying opportunity for those.
It will
once
be
you
for
feel
some of these
rates have got to a level.
But I think you've got to be a bit cautious. I'm not selling resources, but you've also got to be a bit cautious. They've run so hard.
Absolutely.
So you're rotating. We're rotating. Keep rotating.
Love the rotation.
It means there's opportunity for those who are patient and look for value when things are. No one wants to touch the parts of the market.
Okay, Paul. We're heading into Christmas. And you're heading into Christmas. We've had a great year. Thanks for joining us on Mad About Money. I'm Peter Switzer.
I'm Paul Rickard.
And we are Mad About Money.